I think GFC was fundamentally different because it was a problem in the financial sector, mainly in the US subprime market. This is a combination of economic problems and things which are flowing through into financial problems. And to be honest, we haven't seen a reordering of the global economic system on this scale since the 1930s. And that was the Smoot-Hawley tariffs, which certainly didn't cause the Great Depression, but were contributors to that. And also on the other side, on the financial side, the excesses that have built up over the last 20 years are far greater than I've ever seen before. And I think the critical thing there is there's a complete disconnect between cash and earnings and valuations. So the difference between valuations and everything else has become stretched. So I don't know how bad it could be, but all I know looking at history is it could be very bad.
And so, what you are saying is that an economic downturn comparable to the Great Depression of the 1930s is not inconceivable.
Certainly it's not inconceivable, and I think the caution I have is this is like going to a football match and the national anthems haven't finished playing and we're trying to judge how the game ends. And it's almost impossible to do that.
Unlike the banking crisis of 2008 and the share market crash of 1929, the catalyst for this latest crisis has been the US president himself. Is it within his power to undo the damage he's already done?
Well, the best thing I could say is what Lech Walesa once said, which is it's difficult to make an aquarium from fish soup. So basically, he has tried to undo the entire economic system as it's existed for 40 or 50 years. And I think the loss of trust in the US, the loss of trust in the basic way the US has operated is very, very critical to understand. And I would not be surprised if it's very difficult to go back from there. And the other interesting issue is that one of the questions I have is the intellectual caliber of the people involved. Mark Twain once said that he didn't know about the people who were ruling us, that whether they were very smart people putting us on or they were imbeciles who really meant it. And we're still trying to work that out.
Well, what do you make of what Donald Trump and the White House is trying to achieve, the stated aims, whether it could work?
Well, I think you have to go to Shakespeare, which is if there's been madness, there is method in it. Because there's a plan here. And the plan is to try to address a wide range of US grievances, which range from the loss of manufacturing jobs. It looks at things like basically national security. There is things like the budget deficit, the trade deficit, the overvalued dollar, and the role the US dollar plays in the financial system globally as a reserve currency. He's trying to address all of that. And tariffs is just one part of that program. And probably the one that's most overlooked is what is known loosely as the Mirren Plan. This is a way to try to address the US budget deficit, trade deficit, and also US debt. And that would involve, believe it or not, taking US government bonds, or a certain portion of them, and forcibly converting that into 100-year or perpetual bonds with low coupons. Alternatively, they could charge user fees for US treasuries. And those types of measures, including capital controls, are a complete reversal of what we have seen over the last 40 or 50 years of globalization. So this is part of a plan, and the problem is we really don't know how many bits of it are going to get actually implemented, when they'll be implemented, because what we've seen is the whole process is entirely erratic. You know, people embrace the idea of creative destruction. All I'm seeing now is destruction without any creativity.
And so, do you think it could work, or do you think we're going to see a flight of capital away from the United States or something else?
Well, I think if they start to play with the dollar, which they are to some extent already, they've tried to devalue the dollar. I think once you start to play with that, the loss of confidence will mean essentially that overseas holders of US assets will start to sell. And at the margin, that makes it very difficult for the US in several layers. The first is the dollar will crash, which will actually make the tariff problem worse. Because in the 2016 time when he put tariffs on, the appreciation in the US dollar actually offset part of the cost of the tariffs. And that'll be the reverse now. The second thing is, if there is a loss of confidence in US Treasuries, interest rates around the world will move up. Holders of US Treasuries overseas, like the Chinese, the Japanese, and also other East Asian and also the petrostates, will start to sell, pushing up interest rates. And because US Treasuries play such a big part in setting interest rates around the world, it will completely destabilize the international financial system. It's all very well for somebody to say, I'm going to change things, but you've got to have a very clear idea of what the end game is and how you get there without disrupting anything. Unfortunately, I don't see that plan currently.
A lot of analysts argue that Australia is well placed to weather these shifts. What is your view?
Australia is better placed than most. We're not terribly dependent on the US in terms of trade, but it's the secondary effects because of our reliance on China, which is obviously involved in a cage fight with the United States for dominance. And the second thing is, if the global economy itself slows, we'll be affected. That's the first thing. We have a bit of ammunition in terms of that our debt positions are not as bad as other people's, but there's a fundamental dilemma which nobody wants to talk about, which is a geopolitical one. Because economically, we're completely dependent on China, because it accounts for somewhere between 35 and 50% of our actual exports. On the other side, our cultural, political, geostrategic links are to the United States, particularly for security. And I think Joe Bielke-Peterson once said that, you can't run along a barbed wire fence with a foot on either side. And we've done that for a long period of time, and we're going to have to choose. I think we need to understand what Henry Kissinger once put forward, which is that it was dangerous to be America's enemy, but to be America's friend was fatal. And we are now caught in that dilemma. And unfortunately, I don't see any real attempt to address that dichotomy.
Is that going to be one of the most pressing issues for the next federal government to address, whatever its composition?
I don't think it matters who's in government. I think we are going to have to deal with these issues. And I think fundamentally we need to have a couple of principles which I don't see being talked about. The first is we have to do what Lord Palmerston once says, that countries don't have permanent friends, they have permanent interests. And we have to reconcile our interests. The second thing is we have to be extremely pragmatic about how we go about this. And the last element to this, which is probably the most dangerous, is that we need to actually be able to manage these things dynamically over time in an environment which is extremely volatile.
Dr. Das, thank you for joining the program.
It's my pleasure.